Is when it breaks. Welcome to the internet. Good to see everybody. Time for our monthly discussion about early stage startup fundraising. We're going to have a good chat here for today for at least an hour or maybe more if you've got lots of questions. And I've got a special guest, a good friend of mine from Cake Equity. We'll bring him on in a couple minutes. So this is a monthly discussion that's really about the needs of early stage founders. I'm really happy to be here. It's lunchtime. I'm putting off my lunch so I can talk to you here from sunny Southern California. And if you have questions about startup funding, fundraising, strategy, marketing, especially stock options are going to be a big topic today. Be happy to have you join us. You can join us on camera and be happy to have you do that. Let's put up the link for that. Let me get my captions going. We're going to turn the chat room on in a minute as well. So please invite your friends. We're live on LinkedIn and Facebook and YouTube. And if you'd like to join us on camera, then go to that URL there, founderofficehours.com. And that would be the place to come on camera with me. And of course, it's more fun when it's not just me talking, right? So, but we'll get the chat room going here and everybody can let us know where you're from. And hopefully you can hear me. It sounds like people have been able to hear me so far. And the comments, if you'd like to comment, you can do that over live on YouTube or on LinkedIn Live. And I think on Facebook too. So go ahead and type in, let me know where you're from. I'd love to hear about our reach today. And I am Scott, I'm your host, and I'm here today to talk about fundraising and really trying to help more startups get access to the kind of murky and clubby world of Silicon Valley. I'm a longtime internet entrepreneur. I've been building companies and raising money and advising for decades now, I hate to admit. And these days I'm mostly an investor. So I spend a lot of time working with early stage founders and really with ecosystems to try to help them level up, to share the wealth basically that is coming in largely to Silicon Valley or maybe to some of the financial capitals, New York or London or so forth. But I really think that the internet, the promise that a lot of us were excited about back when the internet started. I was at Stanford in the middle 90s when the commercial internet launched. And we were really excited because the idea was that the internet was going to level the playing field and that everybody was going to get a chance to participate on an equal basis. Well, obviously, not so much. We've certainly made some progress, and there are a lot of people committed to doing better, and I'm one of those people. So I'm here today as a volunteer. I run the Startup Council, this organization here. There it is. And if you haven't heard about the Startup Council, please visit us on LinkedIn and follow the Startup Council. And we are dedicated to helping early stage founders, first generation founders, underrepresented founders, minorities, women, all those kind of folks who basically don't look like me to get on the train and join the party for the success of the internet economy, really, knowledge workers, right? And I hope that today's session will be helpful to you. So we're going to get on going here for a second. So a couple quick housekeeping notes. First of all, if you want to invite your friends, that'd be great. The more the merrier. They can come online if they're not on LinkedIn Live with us, as many of you are. They can also head over to YouTube, and we're going to take questions from everybody. It looks like we've got the K9 Wagster checking in from Anaheim. Zach, everyone hit the like button and burst. Thank you, Zach. That's a great idea. Yes, that's true. This is free, and I would love it if you would like it and share it and subscribe. That's all we've got here, right? We got to help each other. Rising tide lifts all the boats. So +1 or +10 to Zach there. Thank you. Eric Polster from Burbank, and let's see what else. Shakir from Raleigh, North Carolina. All right, cool. Well, keep it coming, guys. Let me know where you're from, and I'd be happy to take your questions in the chat room as well. But of course, we're going to do it first on camera. Like I said, there's my friend Athena, also from Anaheim. We've got good coverage here in Southern California. That's where I'm based. Virginia. Hey there, Uyghur Film Productions. Let's see. Okay, so let me tell you about. We've got my partners in this endeavor are the Women's Business Center. Women's Business Center is a U.S. government program, actually, and I've got a very high-tech version of their logo. Here it comes. Orange County Women's Business Center. So they're big partners of mine, and I do that so I don't crash the system. But there you go, Women's Business Center. Thanks to those folks, and Kim Shelton's the director there, and they're particularly focused on helping women, obviously, get their businesses going. So if that sounds useful to you, reach out to me or find them online, and they'll be happy to help you. And it's free. This is government funded. They offer no cost business consulting for entrepreneurs and small business owners in Orange County, obviously with a focus on women. And they're hosted at Cal State Fullerton nearby here with funding from the Small Business Administration and Governor Newsom, the governor of California's Office of Business and Economic Development, also known as GoBiz. So thanks to those guys and gals. And we're going to get going with our questions here. What else we got? I'll make sure I got everything. Let's see. Oh, of course, we have a sponsor. So we have our sponsor, which is Cake Equity. And this is my good friend, Jason. We're going to bring Jason on in a minute. I think I have a high-tech version of their logo, too. Ready for it? Wait for it. Wait for it. Ta-da! Cake. So there's Cake. But Jason will be on in a minute. He's got on, I think he's wearing a T-shirt that says that, as he often does. So we'll be talking to Jason about stock options. So particularly think about this show is really about fundraising questions, and we can talk about anything. You know, I've been doing this a long time. I've written these books over here, in case you didn't know. The ones in the middle are in English. The other ones are all different languages all over the world. So if you're joining us today from somewhere else on the planet, welcome. It's probably not lunchtime where you are, so thanks for getting up in the middle of the night. Some of you, I know folks from India and Australia come in at all different hours. So thank you for being here. But really, we can talk about anything. But the place where I consistently get the most questions and confusion actually is finance. So fundraising is what we're going to talk about mostly, and especially around stock options with my friend Jason. And we're going to focus on stock options questions. So if you have some of those, I'm going to interview him for a few minutes to kind of get the basics out. And then your questions will be welcome as well. Then we'll also go back through the chat room and try to answer those. But the best questions are those. Let's see, where is it? Here, if you're on camera with me. So, okay, so let's go back here. Sorry, I got a lot of housekeeping to do. And then believe me, this is going to get more interesting very soon. Okay, Cake, and then Jason. Oh yeah, here. So comment on LinkedIn or YouTube if you'd like. So it looks like a bunch of you have figured that out. Oh, disclaimers. This is not qualified legal or financial advice. I am an attorney, but this is not legal advice. We do not have a client-attorney relationship. And none of this, this is all just for entertainment. I'm just a guy on the internet, and you should treat me as such. You'll get what you pay for here. This show is being recorded and will be shared online, and I appreciate your cooperating. Like somebody said, Zach at the beginning there, would love the likes and subscribes, smash that like button, et cetera, et cetera. And let's see, if you want to connect with me on LinkedIn, there's LinkedIn, not surprisingly, Scott Fox author, and join our newsletter list, blah, blah, blah. Okay, enough of that. Okay, so let's get on to my friend Jason. So quick station check. You're listening to Startup Fundraising Office Hours with Scott Fox. And I'm the CEO of the Startup Council, and we're going to bring my friend Jason on. Let's hope the magic of the internet works correctly. Look at that. Hey, Jason.
Oh, my goodness.
Yes.
You were right about the shirt. Well done, Scott.
Caught you. No surprise. All right. Well, good to see you. And for those who don't know, we do a different layout here. I don't know. Is that better? It makes us kind of big. Let's see. What else we got? There's lots of choices here. I love these tools these days. Let's try it. I don't know. You guys can vote in the chat room. You're a little blurry there, Jace. I'm going to go with that one, at least for now. Okay, so this is my friend Jason Atkins, and he's the co-founder of Cake Equity, and Cake is based in Australia, as his accent gives away, and they're a specialist in stock options. And this is an area, I got involved with this company. Full disclosure, I'm an investor, actually. We do a lot of things together. He sponsors the show. I invest in their company. We go out to dinner together. But I did that because I saw a real need for this kind of product. The same reason excuse me, that I started this show long before I met them, is that stock options are confusing, and cap tables and dilution and managing all that stuff is hella confusing for founders, especially if you don't have a financial background. And a lot of founders either get confused and blow it, or they end up reliant on expensive consultants or third parties who may or may not do a good job. And it's a sore point, a pain point, right? And if you've read any of my books, I'm always talking about finding a problem that you can be the solution for, and that's what Cake has done. So let's get to it, Jason. Let's talk about stock options a little, just to lay the track for everybody here who might not have the background that you and I do. Can you just talk for a moment about what are stock options and how they differ from regular stock? And let's keep the answers short, and we'll get to a bunch of them. But what's the quick version on that?
Yeah, no worries. So a stock option is an option means that you have the right in the future to buy stock. So it's part of the equity of the company. The total equity of the company is normally made up of things like stock, and stock options and safes and convertible notes. That's how we would look at the whole cap table together. If you thought about it in a big list, you have all your stock, you might have your safes and your convertible notes, depending on what you have, and then you have your stock options as well. So all part of the equity of the company, but it's not actually stock. At some point in the future, the stock option holder has to make a payment, which is called exercising, to convert the stock option to stock. How's that for a quick summary, Scott?
Yeah, that's the beginning anyway, right? I mean, it's complicated. So an option is actually the right to buy stock, and it's given to you at a certain price. And hopefully, like today's price is much lower than it will be, say, in 3 or 5 years. So if you get the options at, say, $1 or a penny a share, hopefully in 5 years they're worth much more than that, right? And then you actually exercise.
Exactly.
And you get the difference, right? That's how you make money with options. You don't actually hold the stock. You don't have voting rights and so forth until you exercise the stock. So already you can see it's complex, and that's just the surface of that, right? There's a lot of wrinkles there already. So, okay, so Jason, so what are typical grants for team members, and how do they differ from what founders get? There's like founder stock versus option grants, right?
Yeah, it's another level of complexity with the equity. So just say, for argument's sake, two founders, you start off with 50% of your stock each. Then you might put a stock option plan in place. The normal amount to go in that plan would be, say, 10%. So then the founders would own 45% each, and 10% would be in the stock option plan. That's assuming you haven't done a capital raise. If you have done a capital raise, it's probably 10 to 20% that's been taken up by that investment round as well. So you might have, 35% each for the founders, 20% for investors, and 10% plan, just for argument's sake. And then with that 10% that you have to allocate to your team stock option plan, you need to work out, who's going to get what. So the first, 5 employees or so, you want to incentivize them really well. So they might end up with, a whole percent each or something like that. And there's a few different ways that you can calculate that.
Yeah, and it gets confusing because even with those simple examples you mentioned, the stock option plan is often up to 20%, at least here in the United States. And then every time, like Jason's saying, every time an investor comes in, what's weird, and it's hard for early stage founders, especially first time founders, to get their head around, the investors don't get the stock that the founders had. They actually issue more stock. So the pie keeps, or I should say the cake, the cake keeps growing. Right. And it dilutes the people that were there previously. So it gets messy fast. And that leads to the point of capitalization table. So Jason used that phrase already a couple of times. A capitalization table is the record of all the people that own pieces of the company, either already or potentially in the future through options. And managing that is one of the things that you guys do at Cake, right, Jason?
Yeah, absolutely. The core function of Cake is to manage the capitalization table. It's very important for the startup to know exactly who owns what. And so it's also very important for the investors and employees to know exactly what they own, and make sure that there's trust around that capitalization table, because it's very important for the investors, of course, and the employees to know that the company has this under control and that they're going to maintain that capitalization table over time, so that they trust their investment in the entity, whether it be stock or note or options.
Yes. Okay. Agreed. So that it all makes great sense to me. People in the chat room are complaining that you're lagging and they're having trouble hearing you. They're suggesting that you reconnect. Can you hang up for a second or move? Is there anything you can do to? Everybody should know the replay, I think, will be fine because I can hear him okay. But is there anything you can do on your side, Jace?
How about I try and take my headphones out?
Oh, okay. It might be the Bluetooth thing. Yeah, could be. Let's try that.
Can you still hear me, Scott?
I can hear you. Yeah.
Okay, great. So let me know if that's better on the lag side of things, or if we still need to do anything on that.
Okay. Well, let's keep talking. Give that a shot. That sounds better to me, but I could hear you in the first place. Let's see. Let's see. They really don't want to miss your advice. They think some people think you sound great. Okay, still happening, huh?
Still happening.
Yeah, you're on the Wi-Fi. You're in a hotel. You're in Denver, right?
Yeah, I'm on the WeWork Wi-Fi here in Denver, so it should be pretty solid.
Yeah.
I can't think of a better Wi-Fi network for me to get onto right now. So
Okay, well, let's just power ahead then, and I can hear you, and some people say they can. Um, let's see. Yeah, it's a video. Oh, that's a good point. Michael says it's your video that's taking up the bandwidth. Well, I hate to do this. Let's let you turn off your camera for a second. Maybe we could just interview you more radio style. Let's try that a little bit. Let's try a couple questions like that. Okay, so apologies to everybody for that. This is you get stuck looking at me. Uyghur says they're convinced it's the Wi-Fi. It's a connection issue. Well, maybe this will help with the bandwidth. So let's try. So okay, Jay. So let's see. So let's talk about. Well, one of the questions we got from the audience was, when a startup divides up the capital pie to start, what factors do you consider when dishing out ownership interests and investing opportunities? For example, the developers, people that contribute hard skills versus other people that might contribute industry knowledge and connections and solutions to that. This is from Don Parker at 90025. So that's Los Angeles. So Don, can you hear me, Jace?
yeah, I mean, it's a really great question.
Okay.
Hopefully everybody can hear me better now. So let's go through a few of those key people that you're going to have coming in from day one. So let's talk about developers. So, you can pay them cash. That's fine. They don't necessarily have to have equity, but if you want to pay part cash, part equity, sometimes deemed sweat equity, that can be a good way to incentivize the developers to get them to have a bit of skin in the game, to extend your runway a little bit, because, if you can save, 20% or 50% of the cash component, that can make any capital you've raised last a little bit longer. So you just need to be careful how much you give. I have seen some mistakes being made in this area where just 5% or 10% have been given to these developers on day one, when it's a huge amount of equity, and it creates big red flags for investors down the track. So what I really advocate in this instance is to always understand what the value of your startup is at any point in time, and then you can convert the value of the services that you're being provided into equity as a percentage of the company. So if you think you're at a pre-money $5 million valuation and you're getting $100,000 worth of services for equity, you can convert that 100,000 into 5 million very easily. I think that's 2%. And then that's the amount of equity that developer would get. So I think by doing that, making sure you know what the valuation of the company is, you can mitigate the risk of giving too much equity away, and then you can have a clarity about how to negotiate with those people so that you got a proper agreement in place.
That sounds great. Now that's where it gets complicated, right? And you're right, Don, in the sense of all of that is the financial side. There's also the personal side, right? All the founders need to really put their heads together, and early stage team members too, to talk about the long term. And that's where a lot of the equity splits get a little complicated, because people have different expectations, but things also change over time. If somebody gets married or starts having babies, or somebody needs to move because they've got a sick relative, you need to make sure that your vesting schedules and those participation deals agreed upon in the early stage will last longer.
Yeah, can we talk a bit about vesting, Scott? I think it would be helpful for us. So,
Great.
Our position is firmly that everybody should have vesting on their options, and even founders should have vesting on their founder equity. As Scott says, people can need to leave a company for a wide range of reasons, and no one goes into a startup, as a founder expecting to leave, but things happen, and startups can be really put in a bad situation if someone leaves with 40 or 50% of equity, and there's no way to get it back. So it's not to be negative, it's just to be professional and have a mechanism to utilize when somebody leaves, when or if they leave. So 4 years with a 12-month cliff is very standard for founders and team members. And what that means is the cliff, no one gets any options in the first year, and after the first year, they get that whole year's worth of options. And then the remaining grant is vested monthly. So that means kind of earned monthly. So very important to have vesting in place. Similarly with service providers, if they're working for part cash, part equity, make sure you have a clear vesting schedule on the equity component that the service providers are earning, whether it be an accountant or your attorney or your developer, because you may find that they've only delivered part or there's an issue along the way, and if you have the right, you can say, well, you haven't earned that equity. Whereas if you just have a handshake deal, or if you give them stock straight away, there's no way for you to mitigate that risk if you don't have vesting on your stock options.
Exactly right. And any of us who've been at this a while have horror stories to tell you, unfortunately, where expectations didn't match and things can get ugly and legal, unfortunately. And friends,
it's very, very common, very, very common. One of the biggest issues in the first year or two, I think, for founders and managing their equity and their service providers is in this area. It's very complex.
Yeah, that's right. Well, why don't you, so I guess we can't see you, but I think people aren't complaining anymore. So hopefully they can hear you at least. Well, can you, let's, I hate to do, I'm trying to figure out how you can do a quick little demo or just give us like the 60-second version of what Cake does. We're going to let him do a commercial here because he had some nice graphics, but since we can't see him, he can talk a little extra. What does Cake do and why should founders use it?
Yeah, so as you said in the beginning, I was working as a CFO for startups, and I was just shocked at how complex it was. I would go to see a lawyer and that get lots of confusing information from them, and then I'd go see my accountant. I'm an accountant myself, and then I'd get confusing and conflicting information from them, and the documentation wasn't standardized. And we just decided that we would commit ourselves, over the long term to making sure that startup equity was simpler and faster. So we specifically focus on pre-seed to Series A. We want to save founders time and money. You all have so much to do and so little resources, and so with Cake you can really jump ahead in a lot of ways. The first way is our education, and Scott, at the end, hopefully I can give some links to some really cool blogs and guides and toolkits that just help the founders hack through this stuff, because it is very complex and there is a lot of jargon, but we don't want founders to need to be lawyers or accountants to handle their equity well. And we've significantly improved that opportunity for you all. And then when it comes to the product itself, we have one-click stock option plan, one-click safe round. The software is it's so much simpler and faster than any alternative that we're aware of in the market. So if you're raising a safe round, if you're doing a stock option plan, if you're preparing your cap table for a round, please do check it out, because it's much simpler and faster, and it'll save you real time and money, which is critical in these early stages.
Yeah, well, and that's right. And those of you who watch this show or read my books, I don't like to promote stuff because there's so many resources out there, but I literally invested in this company because I think they're doing it right. They're nice people, first of all, but they're also focused on, sorry, Jason, I'm just going to embarrass you a little, but these guys are doing it right in the sense that they care about helping both the management and the employees get their share. And I think that's where the cake comes from, right? It's like everybody gets a piece, right? And it's a metaphor that I always liked. And the fact that it's easy to use and it's real time, right? It's cheap, right? You said that, but let's reiterate that it's free for up to 5 users. I'm sounding like an infomercial. I apologize, but I'm excited about this company. It's free. I mean, free. You can't beat that. And then it's real time adjustment, right? So I've had stock. I literally right now have stock options in a bunch of different companies from my work over many years as an advisor and investor. And I don't have any idea what most of them are worth because they only update like maybe semi-annually, annually, and it's very murky, right? And I can kind of afford to do that. But if I was younger or earlier in my career, like many of you, you join a company and they say, hey, you get, we're going to give you 100,000 options. It sounds like a lot, but you don't have any idea what that means, right? Unless you can see the cap table or some justification for the valuation. And these guys are making that stuff transparent, which I think is important for the whole community, right? That the entrepreneurs who founded the company, of course, get the compensation, but also that the people that help them implement the vision are fairly treated and have visibility into what it is they're working for. And I mean, financially, right? Of course, the dream, right? CEOs love to talk about the big picture, but what does this actually mean in terms of paying your mortgage, right? And anyway, so I'm a fan of this company. Enough of that. I can embarrass myself. So, okay. So I hope that is helpful. So that's Jason. So who's got some other questions? He's still here, obviously. He and I can take questions. In general, fundraising is our main topic. But if you have other questions on strategy and so forth, love to hear those as well. I'd love you to come on camera for that. Those of you who are backstage, I can see Anasis and Billy and Don and Michael, all dudes. Any ladies out there? Happy to talk to you too. No offense, Michael. And so Sergey and Max. Okay, so yeah, love to have you guys on. If you could type, there's a chat room that you guys have backstage. Can you type and just let me know what you want to talk about so that I can work this into a flow? So Anasis wants to talk about where do you find investors. We can definitely do that. Let me look through the chat room while you guys do that. Just give me a quick shot there, Billy and Don and Michael and so forth. What your question is? Okay, let's look through the chat room, say hello to folks and see what we've missed other than a lot of technical complaints. Sorry about that. Okay, so Shakir and Raleigh and Zach, thank you for the solicitations. Anaheim, Athena, I did those, right? Okay, Atlanta, Kim from Atlanta, Joseph from New York, Mark from Ottawa, Tom from San Diego, Sergey from Toronto, and Cynthia. Oh, hello, Cynthia. I think I owe you an email from Laguna Beach. Maurice from Trinidad and Tobago. Cool. We should go do this at your house, Maurice. Let's see. We want to apply a grant for women-owned. Okay, women-owned grant. We'll come back to that. Uyghur Film Production. Jeff from Detroit went to my high school. Oh my goodness. Hello, Jeff. Nice to meet you. This teachers and lesson plans. Cool. Okay. Nice to meet you. Chicago. India, good. Oh, up in the middle of the night, Vamshi. Thank you for that. Patrick, hello. And let's see. That was just the first couple minutes. Good. Okay, well, let's move a little fast here. You guys don't need me to reread all the chat that you've seen. Okay, Rick from San Luis Obispo. Connection isn't great, Dasha. Yes, sorry, we're doing the best we can. Tap Social says, seems super smart. I presume you're talking about Cake, not me, right? So cakeequity.com. Dasha also would like to talk about how you find people to raise money. Yep. And what do you need to have ready? Any suggestions how to seek funding? Okay. Yeah. A lot of funding questions. Good. Let's do that. And then let's see. Chicken and egg. Yep. Okay, cool. All right. So let me hit one of those first. And Jason, you're still here, right, Jason? Okay. Maybe not. He's probably logging back in. Okay. Anyway, so let me address this first one. Shakir talks, and this is a super common problem, so I want to get this on the table right now. Shakir says, whenever we try raising funds, it seems we run into the chicken and egg problem. We need funding to build the solution, but investors say, once you have it built, we'll fund you. I'm sorry, Shakir, that's how it is. These days, people don't fund ideas anymore. That's over. Unless you can find friends and family who already know and like and trust you, they might do that, but investors just don't, especially in software. It's too easy and too cheap to build software applications these days, or at least a demo that's convincing and get some early stage beta tester sort of feedback. Any of you who are still operating on that principle that somebody's going to write you a check for an idea, you just have to stop. We talk about this every month, and you're not wrong. 10 years ago or 20 years ago, when I wrote these books and stuff, that was a possibility because the internet was so new and the promise was so huge that capital was often deployed early stage at the idea stage. It just doesn't happen anymore. It's too easy for investors. Now I'm putting on my investor hat. Too easy for investors like me to just sit back, as you have found. We can just sit back and say, oh, that's a great idea. You go do that. Let me know when you're making some money, right? Why wouldn't I do that? Every investor is going to do that, right? It's not our job to invest in you. It's our job to make money. The investing is just the vehicle to make that money. So especially institutional investors, meaning venture capital firms and so forth, they have limited partners. They're fiduciaries. That means their job is to make money and take as little risk as possible. So the VC industry has done a great, I should put this in my next book, actually. They've done a great con job on the whole startup ecosystem that they're about risk capital. Well, they kind of are, in the sense that VC investments are riskier than if you go and buy, stock in General Motors that's publicly traded on a stock exchange, or you buy a house or something, right? But from an entrepreneur's point of view, they really don't take much risk at all, especially these days. They're looking for companies that have already proven things, that are growing rapidly with good profit margins. And if you don't have that already, it's going to be hard to get investors to talk to you. So I don't want to be negative. This is a positive show, but that's the fact. So you've got to go out and build something, at least a demo, unless you can convince friends and family to push you along with a boost of capital of your own. Or quite frankly, the other reasons investors don't invest early stage anymore is because building an app might cost $5,000 or $10,000. And if you don't have that, you don't have it. I understand. I didn't used to have that either. But 5 or 10 grand, you should be able to do some kind of side hustle, right? Or sell your car, or, something like that. And that will put it on credit cards ideally, right? And I know not everybody has access to all resources, but that's, most VCs are sitting back comfortably financially, and they don't understand why you can't do that. So it's a tough road. Okay. So that's the last negative thing I'm going to say today, but I want to get everybody on the same page. What we're really talking about is, how do you get past that chicken and egg problem? And we're going to be more positive for the rest of the show, I promise. Okay. All right. So let's bring some people on camera here. And let's see. Let me just get a quick view here. Oh yeah, great. Somebody just brought this idea. Please talk to each other in the chat room, right? Go ahead, help each other. I'm just the convener, I'm just presiding over this meeting. This is your meeting, right? We're here doing this together. Please go ahead, help each other, respond. You can trade your LinkedIn contact information and so forth. For example, here's mine. If you'd like to connect on LinkedIn, go ahead. Please give me a little note though, right? Because I get so many. I don't connect to everybody, but I'll connect anybody that actually is for real. So let me know you're for real, that you're watching this show. If you found it useful or whatever, feedback's welcome too. But go ahead, connect with each other, build a community. We've put together lots of new relationships and jobs and investment deals through the chat room on these shows, right? And that's what we do. So please go ahead and contribute there and help each other. If I'm saying something wrong, call me out in the chat room too. I don't have all the answers. I just pretend I do, right? That's my job. Okay. Let's see. Okay. Now we're going to go, like I said, to the, back to the, sorry, I'm doing a lot of things here at once. There we go. Okay, so let's bring on our friends on camera here. We're going to have a bunch of folks here join us. Here comes Michael and Don and Billy and Enesis. And okay, I'm just clicking here. Any ladies? No ladies in the house. Okay, no ladies yet. Okay, and Jason, are you still around?
Yeah, mate, I'm here.
Oh, you're here. Okay, just audio, right? Okay. So there's our friends. So okay, let's see. What's a different way to do this? All right,
I think my upload speed's a lot better now. So try my video.
Oh, okay.
Before I had no upload bandwidth, but I just did a speed test. It looks like it's 100 meg now, so hopefully that's good for everyone. But please do let me know, and I'll turn it back off if it's a problem.
Okay, great. Well, good to see you. This is Jason again. If you are having trouble with hearing him, please let us know in the chat room, and we'll turn him off again. Sorry.
Or if there's something wrong with my face, just let me know.
Right. The haircut, right? You need the haircut.
Sound good. You sound good.
Okay, so let's go one at a time, if you don't mind, guys. Let's see. I don't know how we got Michael here. Got the big picture. All right. This is my show, man. Let's see here. How do we?
You got the green screen going.
Yeah.
Yeah.
Okay,
No background, but the green screen.
All right. So if you wouldn't mind, guys, just real quick, tell everybody. Well, give me a smile, right? We gotta take some pictures, right, for social media. It's a boys' club today. I apologize to the women in the audience. Okay, let's go quickly, just round robin. Who wants to talk about what? Just give me the 30 seconds. So, Michael, you wanted to talk about a fund you're raising. Is that right?
Yeah. The direction said I could take maybe a minute and a half and talk about a fund that I'm raising. I have that 1 minute or that one sentence pitch. Maybe that would do.
Okay. Let's do that. Okay. That's good enough. I'm just trying to line people up. Okay. And then let's see. And then who is this? Don, did I already answer your question? Are you the one from LA?
Yes, you answered my question, the first one.
Okay, cool. Well, that was easy. Nice to meet you. And then Billy, where are you calling from, Billy?
Chicago.
Excellent. Midwest. All right. What's on your mind?
I just got some questions regarding bringing in capital and initial investments.
Okay, great. Well, we'll use you to help showcase the other questions that were similar to that. Okay, and I apologize. Anesis.
Yeah, Anesis.
Anesis.
I know. That's complicated. Anesis.
Okay. And what were your questions about?
I think I got the answer. Because
Okay.
I'm trying to get investors, but like you say, you have to have already something going on, like build up, because investors will not give you. They're not going to risk it to give you money if you don't really have anything. Like,
Right.
so.
Good enough. Okay. Well, just stay
Yep.
tuned. We'll keep covering these topics, and then let's see here. My screen isn't big enough here. This is we'll come to Max. Sergey, what's on your mind? You unmuting there? Sergey, can you hear me? Okay, we'll come back to Sergey. Max, how about you? Max, can you hear me?
Are you talking? Is it me or Sergey?
Max.
I'm good.
Good. Where are you calling from?
Yeah, I can hear you. Yeah, I can hear you.
Okay.
So I'm building input. Okay, I'm presently in Toronto. Yeah,
okay.
Canada.
What's your question?
I'm building Import Expo. It's like cross-border importer-centric e-commerce platform. You know.
Okay.
No, just trying to know you. I added you on, if possible, if you can be like a startup advisor.
Okay, sure. Good. Well, nice to meet you. Yes. So I do advising. As you can all see, Michael, you're the star today. Congrats. I'm going to go back to that
Big
one.
Smile. Big smile.
So I do advising. Let me get this out in the open for everybody. I do advising, Max, and it's nice to meet you. But I mostly do it through group situations like this. Unless you guys want to pay me hundreds of dollars an hour, I don't have the time to do it one-on-one very much anymore. But I write books and I host events, and I'm happy to do this. But I encourage you to come back to these events and send us whatever questions you have. And we'll talk more in the show here about other ways to get involved and participate. If you really want to work with me, there's actually a page on scottfox.com. It's scottfox.com/work-with-Scott, I think. And there's a list of things like venture groups that I'm affiliated with. If you wanted to pitch an investment, different resources, websites that I've built, and how you can book calls with me if you want to pay for them too. Unfortunately, I have to charge for my time because I only have so many hours in the day. But there's a bunch of resources there /work-with-Scott, if that's helpful. Okay, so Sergey, let's give Sergey another try here. Did you want to tell us what you wanted to talk about there, Sergey?
Hello, my name is Sergey. I'm from Toronto, Canada.
Excellent.
Yes, so I was also interested in like raising the capital for just a startup project, just for beginners. So I have some ideas, have somehow prototypes, but not like finished stuff.
Okay, great. Well, nice to meet you.
I think you already answered my question.
Okay, great. Well, we're not done, so we'll give you some more. All right. Well, nice to meet you. Okay, so let's lead here then with Billy, and then we'll come back to the other guys. So Billy, let's see. Why don't you lead with your question? Then I know some other folks in the chat room that I already mentioned are also interested in early stage stuff, and Jason and I will try to help you.
Awesome. Well, yeah, thanks for having me, Jason. It's awesome what you're doing. My company just got through a debt equity situation. And so having a cap table that's easy to read is fantastic and very helpful. My question is, what, as an investor, do you need in place to know a startup is in the right stage to get your investment?
Excellent. Okay, so that's good. I like the way you phrase that, Billy, because that applies to everybody. Thank you for not making it overly specific.
Sure.
Okay, so I think this will help everybody, right? What does a startup need in place so that investors are interested? Jason, you want to start, or both of us could talk for hours about that?
Yeah, exactly. Well, I regularly present on capital raising for around an hour, and what I found was there was just so much to cover. I ended up creating an equity toolkit that sort of has a lot of these components in it, and hopefully, Scott, there'll be a chance to share that link at some point. But I guess it depends on the round. We're sort of talking early stage here, pre-seed, seed, Series A, so they all have their own different milestones that you need to hit to be able to pique the investors' interest. But if we take it more generally, I think following a industry best practice capital raising preparation checklist is a really smart idea. I've got one that I can share, and there's others out there. So you want to have, your pitch deck in place. You want to have tested that. You want to have your data room ready to go. So, I mean, the worst thing you can happen is you have a really good investor meeting and they say, excellent, show me some information. And then you have to run away and put it all together, and there could be a week or two delay. I mean, you never want to do that. There's nothing worse. You have a great meeting. You want to be able to say, fantastic, here's my longer deck with my research. Here's my data room. You wouldn't show the data room to everyone all the time. I mean, be careful who you show it to. You want to have that work done. I think one thing I would say about preparation is at the end of the preparation phase, it's important that you find investors and advisors that can tell you if you're ready or not. This is the step I always say. Go and actually talk to investors, or find some advisors that you really trust and you say, would you invest in this? Am I ready? What are my gaps? And do that 3 or 4 or 5 times. You'll get a really good understanding of where you're strong and where you're weak, and then you need to make your own mind up, because you want to make sure by the time you're really out there pitching and doing the marketing phase that you're as strong as possible, so you can follow up really quickly. Your pitch is quite strong, and so on and so forth.
Yeah, I agree with all that. I would add 2 other things, more specifics one would be metrics, and another would be relationships. So the thing where the chicken and egg thing we were talking about earlier is where a lot of startups get stuck, is they have the idea, but they don't have enough traction. That's investor speak for sales or money or something, but it really just means numbers, and investors love numbers. So if you are at a point where you've built something, but you don't have any numbers, you're not ready to talk to investors. You need numbers that show something. Like, anything is better than nothing, right? So of course, $1 million a month in profit is awesome, right? But before that, do you have this many signups, or this many sales, or that many newsletters subscribers, or this many likes, or just anything? Like, investors eat numbers. That's what we eat. So if you don't have any numbers, you're too early. So do whatever you can. This is back to how we break the chicken and egg problem. If you have even the most basic mock-up, like, put it online somewhere and see what people say. Get some numbers, right? It's like, 27% hated it, but the other 50% plus loved it, right? Okay, well, that's something, right? You've got more than you had yesterday, right? And keep doing things that give you numbers. That's critical. And a lot of people miss that. As entrepreneurs, we fall in love with our own products, and we think everybody else can understand them. But investors' job is not to believe you, it's to be skeptical, and you need to provide numbers. The other thing is relationships. And so everything Jason said is true, of course. So I'm kind of sandwiching him. Before you have the data room and all the docs in order, you need some metrics so that you can create the data, right, that you have in the data room to share with the investors. But the other thing is relationships. So once you're going to go meet with the investors, well, who are they going to meet? How are you going to meet with an investor, right? And that's what a lot of you are asking about, I think. How and where do you meet investors? So we'll talk about that a little bit. But what I wanted to point out is that meeting with investors only goes as well as the relationship that you have. And if you think that approaching startup investors is like going to a bank for a car loan, it's not, because you're going to have much better chance of getting funded if they already know what you're doing and they've been following you for a while and you've built a relationship. And this is why when I said, your chicken and egg stage, nobody's going to fund you except maybe your family. Well, why? Because your family already knows you. They've known you a long time. They like you. They trust you. And that's what you need to develop with investors, ideally long before you start looking for money. So a commercial bank, you walk in, even today, you say, I want a car loan. They say, well, are you a customer? Right? And then they'll look at your deposit history and so forth, right? Before they even think about that. Investors need that kind of hand-holding as well. So the more data points you get them, give them, the more likely they're going to invest. So you want to start building those relationships soon so that when you have the metrics and you have the data room, they're already inclined to trust you. And that's the key to any deal or any relationship. So
yeah, can I double down on that a little bit, Scott? I think having an investor CRM is really important. It could just be in a spreadsheet, but listing down the investors that you think might. So first of all, who do you think it could be that you haven't met them yet, but then you want to make sure you meet them, and then or get an email back from them. Oh yeah, cool, I'm interested in your space, or what have you. And we advocate doing monthly updates, even to investors that haven't invested. So what you're trying to do there is build trust. So even if you haven't had a chance to have a face-to-face with them, they might see, your monthly update coming in each month, and you never know how many of them are clicking to see whether you're actually executing on the plan, whether you're learning in the right way, whether you're building the data in the right way. And then when you're ready to raise and you email them, they'll say, oh, hang on a sec, I've been receiving emails from them for the last few months. They can go back and check those out, and you should have a much higher success rate in having those coffee meetings or those Zoom calls, and then you put them in your CRM. Right, now I've had a Zoom call, great. Then you want to ask the question, well, when I raise soon, would you like to see my round? So you're trying to take them on a bit of a journey with you, building up trust all the time. And then the actual marketing phase of your round will be a lot shorter, because the alternative is you start your raise and you do it all while you're raising and your runway is really short, which creates a lot more stress and a lot more risk. So you've got to do all that hard work first, so that when you're actually out running your round, like Scott said, you've got the trust and you're much more likely to get the investment.
Awesome.
Is that helpful, Billy? You can tell either of us could talk for hours about this. I have 5 other things I want to say, but we want to get on to some other topics, or let you talk. What was that helpful?
That was incredible. It's good to know that some of the stuff that we're doing is part of the recommendations. It's also good to know that our instincts of having to go out and get numbers right now where we are is in line with what will help us get to the next step. Honestly, if I can ask one last quick question, with an initial round, like we're pre-seed, with an initial round of funding, what's the expected runway for the initial investments?
I'll let Jason answer that, but let me define a couple terms first of all. So runway is the amount of money that you have in the bank that before you run out of money, basically, right? So if it costs you $100,000 a month to run your business, and you have you have $1 million in the bank, you can run for 10 months. That's your runway. So investors are off. They don't want you coming to them when you're already broke, right? Because then they know you're just going to use their money to pay back debts you already have, right? That's a big red flag. So you need to be ahead of the process, which Billy obviously knows. So then, Jason, how would you answer the question?
Yeah, so on the runway, I would normally calculate runway in 2 ways. The straight way that Scott has said, money in the bank divided by how much you burned last month or the last 3 months or something like that. That's the cold way. Investors will also allow you to have some revenue growth in another runway. So you can say, look, if we achieve these revenue growth goals, our runway can be extended. I would normally have both those pictures and be able to discuss them well with investors. With pre-seed, so with seed and with Series A, we would always advocate for 18 months runway. Given the difficult conditions at the moment, I think the advice is 2 years, just because we're not exactly sure when the market's going to turn around again, and you want to try and make it as long as possible. Now, my experience is that pre-seed is the hardest one to do that, because you have the least runs on the board, the least track record, your investor network is lower. It's just so much harder to get that first round done. So I've seen pre-seed and seed actually happen much more closer together. And pre-seed can actually happen over time in my experience as well. So you may not be able to get the full 2 years done in one go. I don't know. I'd love to get Scott's opinion on that, but I don't see that all that often. I think it's important that you can raise enough money to get to the right milestones. So you need to need to be able to raise enough money to hit some milestones that will allow you to raise more money, whether that be raise additional pre-seed or whether getting you actually to your seed round. And so it's important to articulate what those milestones are going to be and how this funding is going to get you to those milestones to build trust with the investors so that you can build that first pre-seed round up successfully.
Excellent. There we go. Quick master class. All right. So let's see what the chat, let's just follow up a little bit here in the chat room. Let's see. Sorry, I'm doing a lot of things here at once. Okay, so I'm sure there's some follow-up questions in the chat room. Thanks, Billy, for sticking with it. And I apologize. Obviously I was playing with the settings because I'm trying to figure out what looks best.
Keeps it interesting.
Yeah, right. Let's see. Well, Dasha wants to, how do you find those people? Okay. Start up a new industry. Yeah, chicken and egg. So we've covered some of this. Here's an easy one. Joseph, Christopher, how do we go about getting celebrity investors? Talk to their agents or make friends with the celebrities. There's no easy answer there. I like the summary. Paradigm Switch says, so the investor interest will exist when the product and sales records exist, correct? I think that's a fair summary. I mean, anything's possible, right? We're all, all about big ideas here, but if you have sales records that show you're selling stuff, then yeah, people are gonna be interested. If you're making money, people want to get a piece of that. That's human nature. So yeah, I think that's a nice summary. Okay, we have the designs.
Yeah, while you're looking there, I think pre-seed any kind of traction at a product, and C is real revenue. That's sort of how I would separate those as well. Real revenue that's growing a little bit, and you're really seeing that early proper revenue traction. That's more like a seed round. Earlier than that, you can perhaps get away with more top and middle of funnel traction, perhaps some early indicators, pilots, things like that, as long as you've got some sort of MVP in market.
Right. Okay. So I hope that's helpful, Billy. Nice to meet you. Hope we'll see you again. And let's see. So I'm going to ask, we're going to say goodbye to Billy for a second. Hopefully you guys are hearing and seeing Jason okay. You can give us a sound check again if you'd like. Let's see. I would love to have Lila from Lila Byers. If you want to come in and ask your question, that would be great. Al Horry says, I agree with Scott. My firsthand experience with asking for funding an idea went nowhere. I'm rolling up my sleeves and doing the work myself. That's the piece that I think is really missed. The media, media is run by people who haven't built businesses, right? They're journalists, no disrespect, but they're not entrepreneurs. They're journalists. So they love the story of like, this person, magically made money appear out of nothing. It was easy, right? And it's bullshit. You got to work, right?
I haven't seen it happen, although there was some crazy crypto stuff, but that goes down as quick as it goes up. But like every successful person I know, it took a lot of hard work over a long period and a bit of luck. So you really do need to dig deep.
Right. So Lila, come on in if you can. And the other guys backstage, we only have 10 slots backstage. So if you're watching and not going to ask a question like Max and Sergey and Don, if we already covered you, I apologize, but can you go over to youtube.com/Scott Fox and watch us there, or on LinkedIn Live and watch us over there instead? And that way I can let other people on camera. So Don and Sergey and Max, not calling you guys out. Appreciate you being here, but we only have the room's only so big. So youtube.com/Scott Fox will get you there quickest. So, but thank you for joining us. I appreciate that. So sorry guys, just doing some backstage here. Let's see. Well, Jason, why don't you answer a question while I'm doing housekeeping here? Cynthia asks.
Cynthia had one. Yep.
Yeah. Are safe notes becoming a thing of the past? What do you think about safe notes?
Yeah, so I first of all, I don't think they're becoming a thing of the past. So the purpose of a safe note is to have a round that is faster and less costly. They're not as good as they used to be. They used to be extremely standardized and everybody knew what they were, and you could sort of sign them instantly. It's a little bit more complex now where you normally need to get someone to look over the terms of the safe because they're not totally standard like they were, but they're still very good for pre-seed. They're very good for a bridge round, so like a seed plus or something like a pre-series A, where it's difficult to find a valuation. It might be difficult to find a lead investor. So just say you go out to raise 5 million, you can't find a lead, but you can pull together 2 million in safes. That's a good situation to use a safe. I think pre-seed as well, where it's really, really hard to get that first round done. You can raise with a safe over time. The difficulty with a priced round is everybody has to invest at the same time, and it has to go through an attorney normally. There's an escrow, there's normally an update to the stockholders agreement, and it's just much more costly and complicated. And so, yeah, like safes are not totally safe either. You need to be careful with them. You don't want to do too many. You need to watch out for things like the discount and the valuation cap, because they can cause you problems if you're not modeling your cap table out forward. So not totally without risk, but they do work well in certain circumstances.
Excellent. Thank you for that. All right, let's bring Michael on. Michael had a fundraising question, I think. So let's hear about that. Here he is again, star of the show.
Michael, oh yeah,
I'm gonna be a star now.
That's right. Where are you geographically?
Geographically in Delray Beach, Florida.
Florida. Okay, great. Nice to meet you.
cool.
All right, let's have it.
Well, I put it in the chat there. Let me read it to you, I guess. We're raising money for a finished product, but we're working through an equity fund. So there's an array of patented products. One particular company, Leonardo Corporation, is going to release about $250 million of product into the market. And it's just going to change the field. The other 9 companies are going to see a huge inflow of cash flow from competitors. So we're trying to attract an accredited investor, but we're doing it as an equity fund that have relationships with the other companies that have actionable patents and LOIs with large cap publicly traded companies, defense contractors. How would I get the $200,000 I need to get through the broker dealer process on a $40 million raise?
So you're trying to get a broker dealer license first, and then
Nope. We'll employ a broker dealer.
Employ a broker dealer. Okay. So what's the $200,000 for?
For the 40 million capital raise, it's basically.
Oh, you want to pay the broker dealer? You want to pay the broker 200,000?
Yeah, I mean, it probably won't be 200,000 because we have some gray hair on the team, and they'll be able to, you know what I mean?
Yeah.
Keep that nice and low.
What kind of investor do you think is interested in that?
It'll be an energy investor. We're green energy. It's 0 Point Energy. Leonardo Corporation is run or headed by Andrea Rossi. He's the guy releasing $250 million of product this year. And it's basically energy without a grid, scalable from very small to very large. It's a reverse engineered process. We reverse engineered in lightning strike.
Wow.
So that's something that happens in nature, and we finally figured it out, and now we have energy basically with a on-off and with an on-off switch and a volume switch.
That sounds amazing. This sounds a little too specific maybe for this show, but I guess my first reaction would be, if I'm understanding you correctly, and I may not be, if you're trying to raise money to raise money, I don't know many investors that are excited about that. I mean, they want to invest in a thing, right, that has a direct return. It just sounds complex, especially if your opening description there is networking with a whole bunch of other patent portfolios and stuff, which I guess makes sense on paper, but the complexity of that is beyond what most investors I know would want to engage with. Just the due diligence alone involved sounds so complex that
we've done a great deal of the due diligence, so we could be helpful in that respect.
Okay. But that would scare me. I mean, I don't have time for that kind of stuff, but that may be me. Jason, what's your reaction?
Yeah, it sounds tricky to me. I think with so many parties involved and so much money involved, I think that someone from that consortium should stump up that cash under some sort of deal, to get it over the line would be the best bet. Or perhaps the broker dealer could work on a contingency basis as well, and get paid out of the proceeds of the round. It's just another idea.
No, exactly.
Probably floated that already. Yeah.
If I'm doing the math right, 200,000 is 0.5% of 40 million. I mean, that's a rounding error on a deal that large. I would think, it doesn't sound to me like a separate raise. If people are interested, that's just part of the deal. It just would happen. If you're dealing in numbers that large, and when I was an investment banker,
exactly.
We wouldn't. Those
you
are
need to have at least a quarter or a half of that lined up before you even start, and then someone just needs to put the first 200K in to get the whole deal going, or something like that.
They sound like two different worlds. Like a $200,000 deal is a small angel deal. but this is a really complex corporate finance level deal. To do another deal, which is 40 million, which is like investment banker like Goldman Sachs, JP Morgan level deal, the structure sounds it's beyond the scope of this show, I think. Basically,
sounds like it. It's complex, yeah.
Yeah. Real. It sounds like real money, right? So yeah, I don't know if I have much more than that. I mean, if you want to talk through it sometime, we could book a call together or something, I guess. But I think you're playing the bigger leagues than we're covering here. I apologize. So
appreciate that. I'll definitely take you up on it.
All right, great. All right, well, it was nice to meet you, and enjoy things there in Florida.
Nice to meet you. Cool project.
Yeah, it sounds amazing. I mean, lightning in a bottle, literally, right? I mean, but yeah, big money. Okay, so Lila showed up. Okay, so let's talk. So Lila was posting. Here she is. Great, nice to meet you. Is your sound on?
Hi, Lila.
Hi, it's Layla. But yeah,
Layla.
All right, nice to meet you. Great, nice to have some female representation on the show. In addition to hearing your questions, which you posted in the chat room, which sounded interesting. So, so what do you want to repeat those a little bit? Just give us some context, and we'll see what we can do to help.
Yeah, so I started a fashion accessory company with no marketing, no PR, nothing whatsoever, and it's been 2 years, and I've sold almost over $1 million in sales. I've grown a little bit too fast, and that's been one of my biggest concerns. When I have no experience when it comes to funding or raising or business experience. I was a pre-med major, so I know nothing of that side. So I'm now in the phase of trying to find investors, and it's the hardest thing to get anybody just to look at it or just to listen to me or have that opportunity. One, I don't know how to evaluate my company, and then 2, to find those investors, but also 3, once I find them, how much do I give up? Like that whole process, I just don't even know.
Yeah. Well, welcome to welcome to the jungle. You're literally you just gave the outline for my next book. So, first of all, congratulations on what you're doing. I mean, that's fantastic. The reason I do this is because I love meeting people like you. Entrepreneurs get shit done. Good job. That's exciting. Well, very nicely done. So where to start? Well, I would start with some of the things some of the themes we talked about already, which is it takes a while to meet investors, and you need to build those relationships slowly. One of the Jason alluded to this, and I'll let Jason answer too, but you need to get out to where the investors are, and we can talk about that in a minute. Jason, sorry, quick side note, that you just posted that in the backstage chat room. You need to go over to YouTube or LinkedIn and post it there so the public can see it. That was just
okay, cool. Yeah. Okay.
Jason's going to share some links like he promised, and please go ahead, Jason.
Okay.
So getting out to the into the investor world, well, let's talk about that a little bit because other people had that same question. But the other point I wanted to make was about touching, not literally touching, but reaching out to connecting with investors repeatedly. And this is one of the ones that I'm going to be in my book. Investors invest in lines, not dots, right? So you need to create a bunch of different contacts.
I love that. That's one of my things.
Okay, maybe I got it from you.
That's awesome. No.
You need to build a trend line for them, right? They met you in November, they heard from you again in December, and then in January you had some good news. Ideally, it's usually good news, but not necessarily all, but realistically, keeping in touch with them repeatedly, and he was talking about sending updates, you need to identify the investors and then reach out to them repeatedly so that they can see this line. Because like I said, investors eat numbers and trends and graphs, and that's how you would get their attention. And it's not easy. So I'll stop there for the moment. Jace, do you want to pile on, or Layla? Go ahead and follow up if that didn't make sense or that spurred another question.
Well, no.
Yeah, look.
I do understand that, but sorry, go ahead. I would love to hear more.
Yeah, so because capital raising is so complex, I built this equity toolkit. I'm going to put the link on YouTube and LinkedIn, and it's got so many resources. It's got a step-by-step guide for how to raise capital. So like how to make your pitch deck, how to do evaluation, how to model your equity, how much to give away to an investor. Would you do an equity round or a safe round? So there's a whole checklist in there of all the steps. And unfortunately, if you want to raise capital, you just need to go through them one by one, and it takes, I'm now in my fifth year of doing startups, and it's just a constantly evolving process of learning how to raise capital. So I would recommend just getting that and just going through the checklist stage by stage, and you'll learn so much. And if you get stuck, just hit me up on LinkedIn. I really do love helping founders, to navigate this stuff. So follow a tried and tested process would be my first comment. The second comment would be understand your niche and find investors that invest in your niche. I mean, there's no point going to pitch like a SaaS investor for something that's fashion, because you've got different profit margins and it's in a different industry, and you're just not likely to be successful. So like I said before, with the investor CRM, you need to start researching in angel groups, and like angels do invest in retail and fashion and product businesses. They do. It's just not that they all don't, but some do. And some like to have a balanced portfolio of very high risk things that might go up 100 times and businesses that could potentially make a profit in the next couple of years. And so they have a nice balance in their portfolio. And that's probably something that you're looking for as well. So look, you've got revenue, you've got traction. Sounds like you've got a business that's fundable. You just need to learn how to do the capital raising. And then you need to pitch in the right room, is something I always say. I mean,
so
that's the key.
That is actually something that I'm a little not like it kind of gets me a little bit, because I've listened to tons of like founders, especially in the retail space, because I feel that a lot of investors, when they hear it's a consumer product, especially fashion accessories, they instantly think it's just retail, when actually it's a full tech play. And that is why I'm having a hard time trying to let people like, oh, you're selling fashion accessories. I'm like, yeah, but have you heard of Away suitcases? They were funded by a full, tech, venture firm, and their pitch deck was completely saying that we are a tech company, even though it's a consumer product. And that's where I think I might not have my pitch deck in the right position and being.
We had the same problem early on where we were doing. While we were building our software, we were doing services. And when we would go and pitch, investors would look and they say, well, all your revenue is basically services revenue. So they didn't trust us to be able to launch for software and be a software company. So the first couple of years, we still were able to raise money, but it was very challenging and the multiples were lower. And then once we really got the software built and the software launched and users on the software and growth with the software, which is normally 95% gross margin or 90% instead of 50 or less, then we were able to get more traction in the investor's mind. So I think it's very important that you can articulate the different business models that are at play, and it's the stages that the business models are going to evolve, and help the investor understand what that journey is going to be like and what they're actually investing in and what the margins are likely to be, as you build out the software component of the business.
So
I agree.
Sorry, go ahead.
I was just going to say, so everything Jason's saying is obviously correct. I put the link in the chat room for the equity toolkit. There's a lot of great resources there that can walk you through. Like you said, it sounds like you're ready to learn the steps. And I think a lot of people watching today or in the replays the steps are important. The piece that I'm hearing that you probably are going to have trouble with, no matter how smart you are, is finding the right rooms to be in, right? Mm-hmm. And that's really tough. Like you said, you've seen the experience already. Most investors these days are, or at least the ones that get all the attention, are software investors. Why? Because that's where the money's just exploding, right? And it's really hard for people who are non-software. I'm involved actually in a company that's a beauty device, actually. So people can't figure out, are they a hardware company? Are they a beauty company? Are they a retail company? Like, they can't get anybody to talk to them because it's a brilliant idea with patents, but it doesn't fit in any of the boxes, right? And all the money that's been allocated for investing, it tends to go into buckets that have a thesis, and that's the word for venture capital firm generally has a thesis. Like we do B2B enterprise software for the space industry, but that's all they're supposed to do, right? So you need to find generalist funding, and here's my real answer to your question. What you really need to do, well, actually, let me put this on the screen. Where did that go? I built this, and it doesn't have a lot for retail. Jace, you did that in the private chat again. You got to copy that link over to the public one, sorry, on YouTube or something.
I can't work out how to do it. So I'm just popping them in there, hoping someone can help me, because I'm on YouTube and it's giving me a weird error. So sorry about that.
Okay, so the trick is to find investors who already are interested in your company. This is my big thesis for my next book, right? People spend so much time worrying about their product, they don't think about who actually gives a shit, right? And who gives a shit? First of all, it's customers, and that's the best data metrics, like we talked about earlier, to take to investors. But then you need to find investors who actually care about your industry. So especially if you're in a challenged industry that doesn't have all the buzz of software like yours, perhaps, the way to do this is to do research. And you need to go out and boil the ocean and find investors who have had previous exits in retail or in beauty or in software, or ideally somebody who's got all three of those components like you do. And there are got to be people out there, like you said, the way.
I totally agree with that. I totally agree with this. It's a matchmaking process, and it takes a lot of research. And then you'll get in a room, and then you'll pitch your pitch, and the investor will be like, "Yes," and then bam, you know. And it takes a lot of meetings. Like I must have had 100 meetings around. Like it's a bit more difficult in Australia than it is in US, but it's going to be difficult this year for everybody, and it takes a lot of meetings and a lot of no's.
That's a great point, Jason. I had a young woman on the show a couple months ago, and she was disappointed that no one was investing in her because she'd had meetings with investors and they all said no. I said, "How many have you had?" 4. 4.
Oh my God. I used to have this joke, like we had an advisor on one of our rounds and he took me all around Sydney, and I used to make a joke, I'd come out of the meeting and I'd be like, "Please validate me," because like you just feel like you're just pitching your soul over and over and over again, and everybody just kind of nods at you and smiles, and then like you walk out and then nothing. And it's nothing against you necessarily. There's 100 different reasons why they haven't invested, and your job is to find
there's one reason. You were in the wrong room. Right?
Yeah.
Wrong room. There's one reason. So the research is critical. So this is a website on the screen, startupinvestorsdirectory.com. It's still in beta. You can bronze beta 50 is a code. You get half off. You can go in and look around. So far, we've got about 1,000 investors, and they're mostly software, but there might be some retail ones. I'm happy to give your money back if you. It's only $99 and half of that, so it's less than $50. We're just trying to cover the costs, basically. But I've spent a year and a half building a database to try to open the doors and let people see. And what we're trying to do is put together a portfolio, actually a portfolio of portfolios, so you can see all the investors and what they've invested in. So you can go and look at a firm and know that they're not the right person for you, right? And maybe they are. There's filters and keyword search, and you can drill down and see. And it will get better as it goes. But love your feedback. And everybody listening, this is for you. I'm trying to open the doors here. And this is your issue. You're in the wrong room every time. People, nobody wants to talk. No. You're in the wrong room, right? Go find people that like this stuff already. And this is my point. You can skip the steps. Remember I talked about friends and family? They already know and like you. Well, who will know and like you the fastest? People who already got rich doing stuff in your industry. They're going to love it, right? Oh, fashion accessories. I love that. I made a fortune doing that, right? And you do it with software. Well, shit, I made my second fortune in that. That's the guy, right? And you got to find that. And not
one thing I'll add.
But hold on, and not feel bad. The other people are saying no, right? Because of course they're going to say no, right? It's like you want to date basketball players, but you go to a midget convention. Like, no, right? So anyway, okay, go ahead.
I love that. I'm very tall, by the way, but no. So accelerators. I was going to say accelerators. So some accelerators have wonderful networks. Part of their job is to build lists like Scott's building. Like this list that Scott's building is incredibly valuable. But there's other lists like that out there. So try and get into accelerators that have known high quality investor lists, because they'll be, as you're going through the accelerator, they'll say to you, these 20 or these 30 are very interested in your niche. Then you get access to them. Or they might have a big list of 2,000 investors they've dealt with over the last 10 years. And in one of the columns, it might say what niche they invest in. So accelerators could be a way. Every investor you meet, ask them, who invests in my niche? Do you know anyone that invests in my niche as well? Because that can be another really smart way to build out your CRM with that intel that you need that's very specific for what you're trying to do.
And in the link that you had sent me, does that also kind of go through a company evaluation? Because I have no idea how to evaluate my company, and I don't know how much to offer investors. Like,
in the toolkit, there's a valuation tool. There's 4 early stage valuation methodologies, and there's a link to a spreadsheet way that you can implement it. So it's very straightforward. You don't really need an accountant to do it. If you have extra questions, just ask me. You can sort of back of the envelope calculate your startup valuation plus or minus 20% in almost all circumstances. If you have experience, I could probably give all of you a valuation within half an hour that would be reasonable for a capital raise. So you can do that.
And we've talked a lot about that in previous episodes of this show. So if you wanted to go back on YouTube and watch, we talk about valuations a lot. We haven't today very much because it is actually simpler than everybody pretends. And I'll leave it at that because we're running out of time. We're already an hour and 15 minutes.
I just want to say thank you so much for this time. This has been honestly one of the most educational classes that I have taken for the past month. So thank you. I do.
No, happy to help. Hope to meet you in person sometime and come to our events. And everybody, join the email list, and please, Layla and everybody else would like and subscribe and stuff. I'm just trying to get the word out here. This information is, there's way too much gatekeeping in this industry, and I'm trying to solve that. So anyway,
speaking of information, I'll put a few links in the private chat, Scott, but I'm going to need help to put them where people can access them because I'm doing two things at the same time, and it's a bit challenging for my brain.
Okay. And we're going to bring on David here for a second. So David, why don't you outline the question you were asking? And I think that's probably we're going to go through the chat a bit before we wrap up as well, because I know a lot of people are text only. So go ahead, David. Where are you calling from, first of all?
From Dallas, Texas, Scott. Thanks.
Okay. Nice to meet you. So go ahead and talk. Jason and I will try to copy that link while David is talking. Go ahead.
Yeah, so I think you've partly answered the questions because it's about finding the right fit without making all the calls, all the emails, all the looking to figure out who's interested. And so we started a mobile app for my daughter when she was 12, so she could sell baked goods. I lived outside the U.S. for 14 years, and we figured, hey, well, people sell things in the streets, so we'll build an app, and she was building from home. So we launched pre-COVID, raised some family and friends round, and then during COVID, we got lots of food rescues. And so we figured we can develop a food logistics platform, because the problem with food waste is it's logistics. Really, there's an overabundance of food supply, and then there's no one to get it, or that's kind of a clunky mix, kind of where Airbnb was years ago. And so just trying to figure out, there's benefits to the community, there's benefits to greenhouse gases, there's lower costs to the stores. For example, Costco gives us food. We get a Suburban full of food every day from one Costco. So that happens over and over.
Okay, great, David. That's great. What's your question?
So the question is to find out, for the different verticals or the different things, the benefits to the community, benefits to the greenhouse gases and environment. It's a business application where they can get analytics. And so it's trying to find out who would be interested in. And I just wrote down that your link there. So that was where my question was.
Okay,
who would be interested? Right. Yeah. Find investors, find the right one before you go and kiss a bunch of frogs.
Yep.
Climate investors are everywhere now. Like climate investing, sustainable investing is everywhere now. I've been looking for any kind of meetup or any kind of climate tech or climate support group and be getting along to those. They're becoming very popular. Climate investing is one of the top categories of investment at the moment. A lot of people seeing great potential, financial potential, but also the sustainability potential. So that particular niche, in my opinion, is like everywhere online. So I'll be looking on LinkedIn, I'll be looking at Facebook groups, I'll be just getting into that industry in general. It's one of the most active investor groups out there at the moment. So that's lucky for you.
Yeah, and I would reiterate what Jason said. A lot of people, they think this is easy, and it's not. It's another job, right? If you're the CEO of a startup company, and you may know this, I'm not meaning to beat you up, David, but everybody, get this, get your head around this. You're building a company and you're raising money. That's another job. So you're going to have to do both. And even if you don't see yourself as a salesperson, sorry, you're a salesperson now, right? And you've got to figure out how to.
It's an enterprise sales process for sure.
Enterprise sales process. And like you said, David, it's kissing a lot of frogs. You got to get out there, and you got to, meetup groups, like Jason said, go to the events. People still, Zoom is good, but face-to-face is better. And if you live in a small town or, overseas somewhere where you don't have much of a startup community, it can be harder. But even then, Zoom and so forth, because of the pandemic, that's one benefit we got out of the pandemic, I guess, is it is possible to meet and raise money online these days, but you got to get out there and meet people, a lot of them, and narrow.
One other thing I learned recently is that investors, when they go on podcasts or when they go on panels, they go on there to advertise what they want. So if you see an investor and they're on a panel and they're talking about investing in climate or investing in sustainability, they're saying, come and pitch me, So actually looking for the investors that are on LinkedIn and on these panels and promoting themselves in whatever niche they're in, that's the signal. So that's another smart way to find investors.
That's a great point. And a way to get in with those investors also is most VCs or institutional type investors have a newsletter or a blog. Get on their mailing list and just read stuff. They're having a conference. They're doing this. They're doing that. Follow them on LinkedIn. Post back. Comment. Just build those relationships. Even if you live far away, you can reach out and build relationships in small. Like we were talking about, those repeated small dots that form a line. So that eventually you get in their head, and then that's what allow you the chance to have a real conversation, hopefully. So
yeah, very helpful. We've raised $105,000 already. So, we've got product, we've got revenue, but going to the next level, it's, most of that's, I still understand most of the seed investing is done locally, not outside of your town. So you kind of have to do it within a certain amount of miles of your house. So I understand all that. So we're doing that. We haven't done much of it because we're still working full time on other stuff that pays the bills.
Mm-hmm. Mm-hmm. Okay. Well, best of luck with it. There is a page at scottfox.com about the different angel groups I'm involved in. If you go to scottfox.com, there's a page. I think it's /startup-funding or something. But if you've got if you've got a really good deal, I don't look at deals myself much anymore. I'm an investor in funds and stuff, but we have organizations that want to see deals. Like Jason said, one of the reasons I do this is for deal flow. So we're interested in hearing from you. Not me personally. I can't, like I said earlier, I don't have time. Sorry, I don't have time to review everything personally, but I can forward it to people. I'm happy to do that. As well as while I'm on the topic, if people need lawyers or accountants or different kind of resources, developers, I have a great network for those. And if you want to send a quick email through scottfox.com or the Startup Council website, and I need a lawyer that does this, bam, we can give you great lawyers. And a lot of them have deals as well because of our relationship. So happy to help. Okay.
Well, nice. I'm going to get kicked out of my room in a minute, so not to be a pain, but I'm renting a room at WeWork. So.
All right, fair enough. Well, we're about done here anyway, I think. Thank you, David. Hope to see you again. And let's, Jason, if you need to head off, that's fine. I will just run through the chat room and clean up any extra questions that we missed, and then we'll say goodbye. So that was Jason. Let's put that back up there. Jason, there it is. Jason Atkins. So thanks, Jason. Good day to you.
Thanks, mate.
Wonderful to see you. And if folks haven't gotten the idea yet, cakeequity.com is pretty cool.
Exactly. Thanks. Great to be here. Have fun. See you.
All right. So let's wrap up, guys. It's nice to see everybody. We just got a couple more minutes left here. Let me just cruise through the chat room. I appreciate y'all being here. Like I said, and somebody said a couple times, if you can like and share, that would be really appreciated. This is a volunteer effort and just trying to get more people engaged with the startup ecosystem. So let's see here. Let me just cruise back through the chat. I think we covered a lot of that. Well, there was one about Uyghur film production. Apply for a grant for women-owned project for my startup. Would love to hear advice from you. A grant for a women-owned project for my startup. A grant. Well, I'm sorry, that's not specific enough for me to help you, but I think you said you were in the United States. If you are, I would start by looking for the SBDC, Small Business Development Corporation. That's a government organization that does that helps early stage founders. This is true for anybody in the United States, and in particular, if it's women oriented. Let me bring up my good friends here at the Women's Business Center. Now, this is obviously the one in Orange County, but there are women's business centers all across America. And thanks to the recent funding, I think it was in President Biden's infrastructure, the IRA, Inflation Reduction Act, I think it is. Anyway, there's a bunch of money coming towards helping early stage startups. And the women's business centers, they're standing up new ones across the country, including here. And I would go look at that. There are also some great organizations around women. There's Women Founders Fund. There's a Women Founders Network. There's a VC firm called Golden Seeds. I mean, there's lots of stuff for women founders out there, which I think is fabulous. But that's probably all I got for you today. Maybe actually, how about anybody else that's watching? Put stuff in the chat. There are some women here, obviously, or people that know women, and maybe there's some other ways to help you there. Okay, let's see. Okay, we got the. Sorry, I'm just reading. Jason, yeah, we got that fixed, I think. Okay, let's go a little faster here. Dasha said, how do you find people to approach to raise money? I think we covered that a fair bit. Seeking funding for a startup in a new industry, Michael says, as in with no prior experience in this, meaning the person has no prior experience in the industry. Well, that's going to be tough. The founders are expected to have experience or something, right? So if you really don't have experience, I mean, this is a sales game. You need to tell a story about why people should invest in you anyway. So there's obviously something driving you toward an industry where you don't have experience. Maybe it's a personal experience or a family situation, something like that. You got to tell your story. And I would turn that into, honestly, I would turn that into the centerpiece of your pitch, Like, if I started a medical device startup, I'd say something like, I'm not a doctor. I never thought I would be, but this terrible thing happened in my family. So I, decided to save the world by inventing this medical device, right? Something personal. And, if it's a problem that you don't have experience, see if you can turn it into a blessing. That's how I would spin that. All right, let's see. Patrick says, at what point can a social media startup raise capital? We have something really compelling and new in the metaverse space that is in beta, but unsure if we should raise until getting users. Okay, I have two answers there, Patrick. One is if you don't have any users, as you've heard for an hour and a half now, it's going to be really hard to get anybody to invest. Some exceptions to that might be in the metaverse or crypto a year ago, maybe climate, like Jason and David were discussing. There are some areas that are so hot that people, or AI right now, super, super big. Maybe you could get people going with a good demo. This is really a question of finding the right investors, right? So if you just go to a conference or start spamming people that you find on Google, probably not going to work. But if you can drill down and find people that are already making bets and hopefully winning their bets in metaverse investing or any other, fill in the blank for your particular sector, you're going to have a lot better time. So research is very much due here. Okay. Leon says, I'm from Canada. Am I in the right place? Well, I hope so. That was an hour ago. So hopefully if you're still here, you figured that out. Happy to have you. Joseph, like to know how hard it is to raise funding for under 10 million to $5 to $10 million. Joseph, love to help you, but that's way too broad. I mean, it's who knows? A lot more specific about your investment opportunity. Okay, there's paradigm switches. I like that summary again. Investor interest will exist when the product and sales records exist. That's a fair summary in most cases. Okay, there's Layla. We had her on. It was great to hear about her company. I hope some of the other folks are having good news. There's Cynthia. We talked about Safe Notes. And let's see. Al says, shouldn't we try finding a potential customer that's using our MVP before asking investors for funding? Yes. If you can find somebody that's using and ideally paying for your product, absolutely. That is so much better. I find out founders are scared. That's the truth. Nobody will talk about it, but founders are scared. They've invested so much of their time, money, and heart in creating something, and they're really scared to show it to customers sometimes because maybe the customers won't like it. And I understand. I've been there. It's a terrible feeling. But the sooner you do that, the sooner you can course correct. And if you don't do that, you're likely to end up with something you spend even more time on, and that isn't such a perfect fit for the audience after all. You got to talk to customers early and often. And if you have an MVP and you have people using it, absolutely. Get some of that done and develop some of those metrics we were talking about earlier. Putting up some metrics can help you talk the language of investors. Investors talk numbers. Sorry, I'm going to write that one down. Investors. Okay. Always taking notes from the new books. Let's see. SD Globe. So I have an MVP now with no sales. I'm a one-man show, so I code, market, and design. Is that a red flag for investors? Well, it depends on the investors. It generally, yes. And it's not so much that we don't believe that you're wonderful. It's that we are concerned that if you can't convince anyone else to buy into your vision as a team member, how are you going to sell it to customers, right? And usually the answer to that is, well, I'm going to hire salespeople. Okay, well, convince us by getting some salespeople on your team now, right? If you're solo and you can do all those things, amazing, that's great. It probably also, just to be clear, we're probably thinking in our back of our minds, this person is really talented, but they're not going to be able to be CEO because they're too busy actually doing everything, right? One of the things that we look for in a growth company is a management team that will allow the senior leadership that they will hire, that will allow them to rise or stay with what they're good at and hire people above them, right? So there's a lot of issues around solopreneurs, but it isn't necessarily a red flag. But it is it shows that you're not yet positioned to really grow, right? That's the real issue. You're not really positioned to grow yet. And if you want to raise money to grow, you probably need more than one person, right? Okay. Let's see. Is it worthwhile to hire a licensed investor broker? In my experience, no. Investor brokers, well, it depends on what kind of investment you're talking about, right? If you're doing private equity type deals or deals that operate with PPMs, private placement memoranda, they'll want to charge you a bunch of money to develop essentially a prospectus for an offering. And that's very common, say, like in multifamily real estate deals or oil and gas leases, but in software and internet type startups, we tend to work on presentation decks, and you should be able to do that yourself. And if you're trying to hire this person for investor relationships, I doubt that they know early stage venture funding. Investor brokers have to be licensed in the United States. So if they've gone to the trouble of getting that kind of license, they usually work in at a higher level in terms of dollars in institutional type money. So it's not a great fit. That's my experience. Your mileage may differ. I could be wrong. Happy to hear from people. If anybody knows a good one, that would be great. Okay, let's see. There's David's question. We covered that. How much investment return, multiple, and exit timeline do investors normally expect? Joseph's back. How much investment return, multiple, and exit timeline do investors normally expect? That's an easy one. As much as possible. Make it amazing. I will tell you that angel investors tend to have a lower threshold than VCs. The way venture capital partnerships are set up, they tend to need like 90% of the deals go bad. So 10% that are left need to do like a 10x, and they need one or two of those to do like 100x to pay for all the rest, to pay for the money they share with their partners, to pay for all the stuff, right? And it has to rescue the rest of the fund so that they can still provide a good return back to their investors. So if you're going to raise venture type money, it needs to be really big multiples. And ideally within, sooner is better, but certainly less than 6 or 8 years if you can, because most VC funds have a life, and the partners are going to float away and be onto new things if you don't get their money back to them. Angel investors tend to look for a little less, perhaps, and are more often motivated also by being able to help, and that's kind of fun, right, for them and for you. Okay, moving on here. Let's see. Paradigm switch. Scott, thanks for disposing of my fantasy that my great idea will bring instant excitement. I'm sorry. Paradigm switch. Guilty as charged. Yeah. Yeah. I wish it were true. Believe me, my first company was that. I spent 3 years and all my money, some of my family's money, and blew it all on this idea. And this is a long time ago, right? The market has changed, but yeah, I had literally have been there. Just about bankrupted myself, and you got to get out and talk to customers and prove to others as well as yourself and to your team that people care enough that they're going to pay you for something, and it may not be exactly what you had in mind, but money talks. This is a business, right? It's not art, unfortunately. So if you can mix the business and the art, awesome, but it's not that easy usually. Okay. Can I send the link for the WBC? I would love to, K9 Wagster. They don't have their website up yet. It's brand new. I mean, brand new. Like they just, the new director was just hired like 2 weeks ago. But I will bring it and post it. If you are, I think you said you're in Anaheim, please subscribe to the OC Startup Council newsletters, and you'll be hearing about them for sure as soon as we get that. OCStartupCouncil.org. Okay, so I think that was a long one. More than an hour and a half. Hope you all found that useful. The thing I would ask in return for those of you still here, or if you're watching in a replay, please hit like and subscribe, share, invite your friends. We do it for dozens of people here and hundreds more in the replays, but there's no reason that this shouldn't be shared to thousands of people. There are literally thousands, perhaps millions of early stage entrepreneurs struggling with issues like this, and I'd like to help them. Hopefully you would too. Please spread the word. We do this every month. I don't have much time to do it more than that, but I do speak at a lot of events, so watch our blogs and newsletters and so forth. And especially if you're in Southern California, be happy to meet you in person sometime. And I appreciate you being here. So thank you, and go out and get them. That's all there is to it. It's a lot of hard work, but if we don't make the world a better place, us entrepreneurs, who's going to do it, right? It's not going to be the politicians. It's you guys and me, and I'd appreciate your help spreading the word. Thanks, and we'll see you online. Bye now.